How is it that some people make millions trading this insane crypto market, while others lose everything? Bonne question. Today, I'm gonna show you how this madness works, why volatility isn't necessarily a bad thing, and most importantly, how you can profit from it. We are going to talk about the different ways people trade and why understanding this will give you a real edge. Disclaimer, that's not financial advice, that's just my experience and I want to share it with you. So first, market volatility. Why some win and others lose? Recently, we saw Bitcoin shoot up to 100,000. And many people think that it's thanks to the headlines like the SEC warming up to Bitcoin after Trump's election. Investors think it's done, Bitcoin is going mainstream. And the most direct macroeconomic reason for Bitcoin breaking through 100K was the nomination of SEC Chair Paul Atkins. We also have geopolitical news. Putin saying Bitcoin is more reliable than the dollar for reserves, like strategic reserves. And the Fed and other central banks finally cutting interest rates, injecting liquidity into the market. And there is, of course, MicroStrategy adding tens of thousands of BTC to its portfolio, worth billions of dollars. He even has more than 2% of the Bitcoin total supply now. That's all logical, right? But still, the market remains wild. Volatility is massive, and we've even seen brutal, bloody crashes. Why does this happen, despite all the good news? There is 3 key reasons. First one, not all news is positive. We can't have like this confirmation bias. There are bad news too, like what happened in South Korea with the martial law and everything. Or the news with Willow, like the Google Willow quantum chip. A lot of people don't understand Bitcoin technology and quantum technology, so they were afraid, and that was bad news for the market. Another reason behind the chaos and why people are selling is just that people trade. They are trading. Most people aren't like me or Michael Saylor from MicroStrategy. Their goal isn't to accumulate as much Bitcoin as possible. Those people's goal is simple. They want to buy low and sell high. And when they sell, price drops. That's normal. Third reason behind this chaos is emotions and leverage. People are bad at managing emotion. When they see others selling and price falling, they panic. Instead of understanding that profits being taken is normal, like we just said, they fear an ongoing collapse and sell too, pushing prices down further. I love, but between us, I was very bad at managing emotions myself when I was starting out too. You know, when I was trading Forex, the number of times I sold at a loss is excessive, and if I had taken a step back and understood the cycles, I could have earned a lot. Today, I know that every fall is an opportunity. That's one of the reasons I do those videos too. Like, I'm teaching that to you now. Anyway, then you've got the leverage traders, what I call the magnifying glasses. Long positions dominate Bitcoin. If prices go up slightly, profits explode for them. But there is a downside. If prices goes down just a little bit, those positions get liquidated. They lose everything. Recently, a sharper than expected drop wiped out 1.7 billion of leverage positions in 24 hours. And then, fun fact, many traders opened short positions, thinking it would continue to drop, only to get liquidated for some again as the market rebounded. Shorting Bitcoin right now, it's a bad idea. We'll talk about that later. First, key takeaways of this first part. Volatility isn't the enemy. It's normal, even healthy. Without corrections, tension would build up and sell-offs would be even more violent later on. And yeah, shorting Bitcoin is a bad idea now. Using leverage is risky. It could be a good idea next year, maybe. Why? Because to win, you need to understand cycles, spot trends, and position yourself wisely, especially during corrections. Let's talk about that now then. Let's talk about market cycles, the secret to avoid surprises. Bitcoin doesn't move randomly. It follows clear cycles. News affects the price, but not the overall trend. Zoom out and trading becomes much simpler. Of course, it takes patience and emotional control during corrections, but once you get this, it's hard to make bad decisions. What is this cycle? It's the 4-year Bitcoin cycle. I made a short video about it in the past, but here, let's go into detail. Since its creation, Bitcoin has alternated between bear markets, lasting 2.5 years, and bull markets, lasting 1.5 years. That's what I told you in the short video. If we go into detail, we can analyze further. In a bear market, there are 2 phases. The drop, when price falls sharply, and then consolidation, when prices stabilize. So what we can see, and as CZ mentioned when I was at the Dubai Binance Blockchain Week, 2024 is a consolidation year, and 2025 will theoretically be the bull market. So knowing that, when is the best time to invest? I think it's during the bear market, of course. But it's tough to time the market during the drop. You never know how low it will go. My advice? DCA, dollar cost average, consistently over the 2.5-year cycle. We can also speak about the phases of a bull market. Phase 1, discovery and early surge. Prices rise as the market catches attention. Phase 2, profit-taking and volatility. It's when early investors take profits. It creates turbulence, and we often have like what we call a shakeout at this time. Be careful if you have leveraged positions once again. Phase 3 is the second rally. Price regain momentum and hit new highs. After that, of course, we will have a correction. So phase 4, correction. And often it's a bear trap. Confidence wavers and a correction hits. But after that, it will rebound. And that's when it gets crazy. We will go to the new top of this cycle. A 4-year kicks in, FOMO kicks in, prices skyrocket irrationally. This is the final profit-taking stage before the next bear market. Pro tip here, watch Bitcoin's dominance, BTCD. When it drops below 40%, liquidity moves into altcoins. That's a sign we are at the top. You can use tools like that. It's hard to time the market, once again, but you can have a look at the Bitcoin dominance charts. So, knowing all that, you can also enter the bull market at phases 2 or 4 during the corrections. It's going to be a lot of emotional management, especially with FOMO, but we'll talk about that later. The easiest thing for me is to have a specific plan. Write it down and stick to it, no matter what the emotions are. A bit of a practical advice. We talked about emotions during these phases, so when everyone's euphoric, it's already phase 5. Take some profits. Even just a portion. We'll talk about that too. And when everyone is panicking, consider accumulating for the next cycle. Look at the people around you. What are their emotions now? Really useful. So I was just speaking about taking profit, even a small part. So let's talk about selling. Let's be smart in this chaos. Timing the bottom is hard. Timing the top, just as tricky, even for the pro players. That's why you sell in stages, just like you DCA the bottom in a way. So for example, you can have a strategy that would be the following one. Sell 20% when Bitcoin hits a key level, like the previous ETH. Sell another 20% if it climbs higher at psychological levels, like 150k, 200k. You can put a few every time you sell a portion. But always keep a portion for unexpected surges, what some call a moon bag. Don't sell 100%. And pro tip, place your sell orders just below round numbers. Beginners often target round figures, and if you are with them and the price gets to these levels, your order could not be honored. If you are just a little bit below them, no problem. So again, define your action plan and stick to it. Stick to it, yes, stick to it. What could go wrong? You are alone in this market. Why wouldn't you stick to it? Because of your emotions. You have to master your emotions. Emotions is the real enemy You are your worst nightmare. The worst trader is one driven by emotions. Fear stops them from buying at the bottom. FOMO makes them buy when it's already too high. So a few tips to counter that. We just talked about it in part 3. Make a plan. Write it down. I insist, but I know you won't do it. Write it down and stick to it. At what price will you buy? At what price will you sell? Define those prices clearly. Observe others. Be the observer, the sociopath. Look at people. When everyone is excited, sell. When they are scared, buy. We talked about that in part 2. 3. We didn't talk about it, but listen to your emotions. When you are scared, buy. When you are excited and want to take screenshots to show everyone your transactions, sell. Don't think that the best traders don't have the same emotions. They just know how to listen to them, and they do the opposite of what most people would do in the same situation. That's all. Understand that trading is an emotional roller coaster. If you have trouble handling that, trade for the long term. Volatility is much more acceptable and you will make fewer mistakes. And pro tip again, the best traders feel the same emotions as you. They just act opposite to the crowd. That's all. Don't think that you will change and transform. You will stay the same. And I was talking about trading long term. Another advice I can give you is trade Bitcoin, not altcoins. Bitcoins remains the best option. There is no second best. I've focused on Bitcoin here because altcoins are another beast entirely, more complex with their own strategies. The ROI, you will say, is better, Cédric. I want to trade altcoins. Yes, the ROI is better, but it's also more risky. So, yeah, if you are interested in altcoins, remember the alt season starts when Bitcoin dominance falls. We talked about that. And for the strategies, just tell me in the comment section if you want me to do a specific video on altcoins trading strategies during bear and bull markets. I can do that, but just I want to tell you, yes, it's more risky. Anyway, here is the truth. Many traders trade altcoins only to put their gains back into Bitcoin. So yeah, Bitcoin remains the ultimate goal. Why? Because it's capped at 21 million coins. Forever. And while central banks print trillions, Bitcoin becomes more scarce and valuable. You don't want your money to lose its value, right? Invest in Bitcoin. It sounds like an advertisement. No, it's not financial advice. You do what you want. It's just my point of view and what I do and the mistakes I made, and I'm just sharing everything with you. NFA. So, to sum it up, despite crashes, Bitcoin remains the best performing asset of the last decade. Those cycles will continue, and those who understand them will keep winning, as a probability statistically. So, yeah, let's talk about you now. Your turn. Will you trade this market like an amateur or like a pro? Will you be the victim of your own emotions? Bonne question. Right? Alright, if this video gave you some ideas, if you gain anything from it, smash the like button, share it, and subscribe. And for those who want to go further to continue the discussion, what do you think will happen in early 2025? Bull run or bear trap? Let's discuss in the comment section. See you soon for more insights and merci et au revoir.